We are live. We're live on Facebook. Of course, you guys are going to be seeing this later on YouTube. So, KSA Kris, the Real Estate Blitz. What's going on, everybody? Good to see you. And I have a very, very special guest. I'm very excited about this. And if you follow me online, you'll know that I'm starting to get a little bit frustrated. I hate kind of what's being put out there. And I think it's kind of our own fault, the people that are in the real estate industry. And what that is, okay, so there's so much I want to say here. I just need to slow down and not get frustrated. There's so much going on in the news media talking about the housing market. It's horrible. This is the worst time ever to buy. I saw an article yesterday. This is the worst time to buy, and it's mind blowing to me because if you know anything about the industry, which is why I brought on an industry expert. Actually, I think you should see him over there. There he is, right? The
Good
industry
morning.
expert. And I won't look. I'm even going to tell you guys, I'm not the industry expert. That's why I wanted to reach out to Charles to have somebody that is the expert to really talk about the truth of what's going on. And for those of you that are in real estate, you can go out there and preach the good word of real estate to those that might be thinking about buying or selling a house. I also want to kind of get this out because I know there's a bunch of people that are not in the real estate industry. And the way that I'm going to be posting this up on YouTube are going to be saying, well, is it a good time to buy? The news media says it's the worst time to buy. It is not true. It is
Hmm.
not true. It is not true. I said it 3 times, so it must be true. I mean, if you're going to believe random things on the internet, why won't you believe me? That's all I'm
Yeah.
going to say. So, with that said, Charles, do me a favor. Go ahead and introduce yourself so everyone can understand
Hey,
who you are.
thanks, Chris. Appreciate it. Hi, everyone. Charles Vamadeva. I am out here in Murrieta, California. I am the broker owner of Patriot Pacific Financial Corp. We're a brokerage. We've got about 30 loan officers. And I myself kind of specialize in VA, have done for a long time, but we do everything. So we do all the loans there is. And my passion is home ownership. And my passion is making it happen for that buyer that's been told no. That brings something out of me. I'm like, hey, you've been told no. All right, let me have a go at it, right? So, and thanks, Chris, for the opportunity here to share about what's going on. And the conversation we're about to have is critical. It's the
It's
crux
huge.
of it right now. So,
It's
thank you
it's
for that.
huge and it's so frustrating to me. So with that said, I think, prior to us jumping on, I told you I'm going to be asking a bunch of questions.
Mhm.
I don't want to say stupid because they're not stupid questions. I think there's so many people in the general public, to include real estate agents, that are scared, that are concerned, and I'm going to be talking mostly from their point of view. So I'll call it ignorance.
Mm,
We're being fed information that I know to not be true, but I'm going to try to ask these questions from somebody that doesn't know, somebody that is scared, somebody that is
mm,
concerned, and
mm.
hopefully can educate us on what we should know and what we probably could say, or how could we can express it to our friends or family, or just random people out there. So with that said,
Mm.
is it a bad time to buy? Is it a bad time to buy a house right now?
I come to the conclusion, Chris, that there actually never is a bad time to buy. And I back that. And I'll be honest with you, I've made presentations in the last 3 to 4 months at different military installations, groups of veterans, and what I'm telling them applies to civilians. It doesn't apply to just veterans. And I've stood there and I've said, "Hey, it's not a matter of should I buy real estate or should I wait. It's a matter of buy real estate and wait, right?" And I've never had one person oppose me and justify the other view, right? So I always start out with there's a graph that you can get online. It's easily accessible. It's by the FHFA, Federal Housing Finance Authority, and it's called the U.S. Housing Price Index. And that basically shows the pattern of what values have done. I've got the one that's about 31 years old, so you can look back to 1991. And I throw this thing up on the screen. I'm standing there talking to veterans, and I say, can someone interpret this for me, right? You're looking at it, they're like, oh, and there's been recession periods in that 30 something years. There's been interest rate hikes and interest rate lows. There's been value, but guess what? If you look at that chart, the values just keep consistently going up, except for 2007, mid seven through about 9 or 10. And the average person might say, "Well, look, I told you, you know what? You should have bought a house." The people that bought houses in that time at the end of 08, 09 are sitting on three, 400, $500,000 in equity,
Right.
right? So that chart blows away the allegation that there is a time that you shouldn't buy a house because apparently values just keep going up. That's the trend.
Great. So let's talk about this up front. So I know in '07 there was a crash. So with that said, are we in the middle of a housing market crash?
I want to answer that. I don't want to be too long-winded, right? But sorry, forgive me for that. I don't want to be too long-winded, but I tell people, look, something exceptional and unusual happened in '07. What was that? We had unscrupulous lending. People were buying houses that did not qualify, right? And as a result, we had artificial inflation in prices. When people started not being able to afford the payments, boom, the whole house of cards came crashing down, right? We have the other extreme today, like where the pendulum is swung the other way. Like we don't even need a blood sample to get you qualified, right? And so now people are buying homes that actually can afford the payments, and we've seen a more organic increase in values. And then, Chris, I remind people what's different today to 2007 and 2008. We have a massive increase in population. We have a lot more people that are in the pool qualified to buy a home, right? And so, for that reason, I mean, you saw the NAR report that came out. Our inventory now is a fraction of what it was in 2008. Does that make sense?
Absolutely. Absolutely. Yeah, and it does. And I think
Mhm.
that's really, really huge because I think, again, going back to, especially, gosh, I get so irritated when and that's why I almost don't look at the news anymore. It's almost like the every year I have the same, I end up doing the same video where I explain and express to people. It's like, oh, it's the winter. I heard this is the worst time to sell. Okay, well, where did you see that? Well, I saw it on the news. Great. Where was that article written? Let's pull it up real quick. Oh, the person that
Mhm,
wrote it lives in Minnesota. They're under
mhm.
12 feet of snow. Of course, it's a horrible time to sell in 12 feet of snow.
Right,
But here in beautiful Southern California,
right.
where we throw on parka jackets when it's under 70 degrees, we're all right. Things still
Right,
sell. But that's,
right.
it's just mind blowing to me. But I appreciate that. So the next one,
Yeah.
let's talk about interest rates. And I'm also going to write it down because I'm sort of taking notes as we're going here.
Mm,
Because as we talk about interest rates, we're going to talk about the new catchy phrases that are being used
yeah.
by people out there to express what people should do to get the home sold. So, interest rates.
Yeah.
Interest rates, when it comes to the general public, it plays a particular, I think it's a mindset shift where they're like, well, and this is what we keep hearing. So, let's back up for a second. Well, and I'm sure every real estate agent has heard this. Well, when the market crashes, that's what I'm going to buy.
Mm,
Okay, so when markets
mm,
crash, let's say they are, which they wouldn't. So let's say the
mhm,
housing market crashes and homes become cheaper. So
mm.
people now say, well, the homes are cheaper, so I want to buy a house. Our interest rates still going to be 2.5%.
Very unlikely. The reason they got down into the twos, to which there was no precedent, we'd never been there before, right? When this happened in 2020, what happened was the feds got in and began to buy billions of dollars of mortgages, right? So instead of institutional investors buying them so much, the feds pumped all this money and bought the mortgages, mortgage-backed securities, and that drove it. And now they're selling them off, right? There's a runoff. And so I'm going to say something pretty bold. I don't think in my lifetime we're ever going to see a 2% or a 2.5. I think that was an anomaly. I think it was artificially created. It lasted a year and a half or whatever. But get this, the buyers that bought houses when those rates were so low bought them at much higher prices, right? I
Yep,
mean, we all saw it, right? They were offering 50,000, 70,000 above asking price. And now, okay, rates have tapered off. I feel like today's rate, five, sixes, is a good, healthy interest
that's what I was
rate
going to ask
for
next.
buying. Yes, it really is, and that's what was normal. We had a humongous market in 2018, 19 when the rates were in the fours and fives. We couldn't sleep. We were so busy, right?
Right.
Buyers got spoiled. They got spoiled thinking, oh, it's 2.5, not realizing that the house prices are 50,000 higher. Now we've had a little bit of a pullback on values. Rates are still, Chris, I'll say this. When I sit in front of a buyer, the question I have to ask them is about affordability. Don't talk to me about interest rates. Talk to me about affordability. Can you afford this home at today's interest rate, is that affordable? Are you comfortable? Yes. Let's move forward, right?
Yes.
Well, I'm going to wait until it's 3%. Well, what if it does get to that in 10 years? You've lost 10 years worth of equity, you know?
Right.
So if it's affordable, pull the trigger. If I may
There
add
it
to this,
is.
Chris, I don't want to go
Sure.
off on a tangent. I classify people today into three categories. Some just don't qualify anymore because of the rate increase, right? They really don't, right? It's too far gone. They're going to have to get a cosigner or get an increase in income. So for some pre-approvals, it's done. I'm sorry, I can't help you. Then there's this contingent that they do qualify, but they're sitting on the fence because the news is telling them there's going to be a crash, or rates are going to come down. But you know what? If they wanted to buy a home today, they qualify, right? Then
Okay.
there's this other group, they qualify and they're ready to move forward. And they're
Perfect.
closing those deals. You just got to identify people in those second and third groups and have a meaningful conversation so you can move forward.
So I love that you said really all of
Mhm.
that. Okay, so let's start with first off,
Yeah.
it's a matter of do you love the house? Okay,
Mhm.
can you afford the house? Does it make sense? Can you afford the house? Is it everything you're looking for? Keeping in mind that the price of that home is actually cheaper now because of the rate adjustment, which
Right.
probably, if you would have got it a little bit ago where you couldn't compete for a house because there's no inventory, you would probably be paying the same amount of money now than you would have been paying then for a house
Right
that's
on.
probably upside down right now. But let's not get a
Right
little
on.
too lost on that. And I think that's important for the agents that are
Mhm.
watching this. Even if you're a person looking to buy, I hope you
Mhm.
heard what I just said. Now let's
Mm.
go back to okay. So the first people that you brought up, you said, look, they just can't afford a home. They're just not there yet, and that's
Mm.
okay. That means
Mm.
let's sit down. Let's talk about how you can get there in a year to 2 years, however long it's going to take. Because owning a home is it's the American dream. So let's talk about the
Mhm.
second group of people, the fence sitters. The fence
Mhm.
sitters. Yeah, I said it right.
Right.
The fence
That's
sitters, right?
exactly right.
So this is where the catchy phrase of marry the house, date the rate keeps coming out because the last people that you
Mhm.
talked about said they get it. They go, okay, well, houses are actually
Mhm.
cheaper than they
Mm.
were. There's inventory available, and
Mm.
I'm going to be paying about the same amount of money as I was going to pay, but now I can actually pick out the house that I want without having to compete with 50 offers within one or
Exactly.
2 days of it being on the market. I hope you
Right.
heard me again for
Right.
whoever's watching this. Okay, so let's talk about the fence sitters. So one of the big phrases that's going out right now is marry the house, date the rate. How do you feel about that?
I think that's a great concept. If I could add to that, if we can get them to the point where they're thinking more about affordability than some pie in the sky future event that's probably not going to happen, they're probably going to pull the trigger. And I'm talking about the temp buy downs. Most lenders are providing that, right? You could take an interest rate in the sevens and start off at 5%, or you could take a rate in the sixes. Our VAs now are down a tad bit below 6%. The APR is a little bit higher. And so potentially a buyer could start making payments at four something percent and go up to 5% the next year or whatever. And so it's an affordability issue. So we want to get them thinking not along the lines of some future imaginary event that may or may not happen, and bring it home and say, what can this work for you? What if you were making a payment based on a 4% instead of a 6%? Would that work for you? I think the 2-1 buy down is a tremendous gateway to help that fence sitter jump in and go into contract.
Okay, so let's talk about that.
Mhm.
And actually, I'm going to go back real quick and just say, for those of you that didn't completely understand everything, we will go deeper here in a second.
Mhm.
But I know, like in the car industry, for almost any of us that have gone out and bought a car, most time they don't really even bother looking at anything else other than what would you like to pay per month? What can you pay
Mhm.
per month? And
Mhm.
if you go, well, I can get that car. Great example, the first Audi I bought, I said, okay, well, I want that car, and I look at the price tag. They're like, well, how much can you pay? And I says, well, I'm thinking, this is what I was paying for this one, and well, can you afford 700 a month? I said, absolutely, easily, 700 a month is going to give me. Are you telling me I can get that dream car for that much money? Like, yeah,
Wow.
let's do it. Right. So
Right.
affordability, I think, is fantastic, but I think this is where a lot of agents, specifically when they try to and I want to be very careful for the agents that are watching this. And
Mm.
I've expressed this to the people on the Kim Steele and Associates KSA team. You are
Mm.
not a lender. Agents, I get so upset with our agents. You are not a licensed lender. Do
Mm.
not preach something you don't know and don't
Mm.
act like you are an expert. That's why you have
Mhm.
people like that guy there that you can
Sure.
call up and have him talk the specific terms. But I think it's important that agents are educated enough so they can say, this is what I've been told by XXX. This is what I know. Let me tell you what, does that sound appealing? Let me get you in touch with the expert so he can go in depth and
Perfect.
explain to you and line you up, right? So let's
Yeah.
talk back about the buy downs. Like, so buy downs
Mm,
and concessions. So when we get to affordability, if
mm,
somebody, gets a sticker shock of we're at 7%, what
mm.
what are buy downs? What are the different concessions that agents could be putting out there to sellers, to try to get for their buyers? What can they do to try to get something that is affordable?
Yeah, absolutely. So a buy down is basically taking the interest rate that's available now and putting money into the lender's pocket to bring that interest rate down. Now, there's two types of buy downs, right? There's a permanent buy down, which means certain amount of discount points are charged. And that permanent buy down means that you're taking, for example, 6.5% rate and you're buying it down to say 5.5. Of course, these numbers vary, right? Per loan, FHA is different to VA is different to conventional, different to USDA. But let's just talk about it generally. The concept is permanent buy down. You're taking the available rate, 30-year fixed, and you're permanently buying it down to another fixed interest rate, and that is it. That's a one-time buy down. The seller can pay that, right? Or there's this thing called temporary buy down, where you're not buying it down in a permanent manner. You're just buying it down for the first 2 years or the first 3 years of a 30-year term, right? So that conversation is basically, look, buyer, I can get it down even lower than a permanent buy down for the first 2 or 3 years. And that's going to give you plenty of time to either have an increase in your income, which makes the house more affordable, or markets change and you hurry up and refinance. You have some what ifs in your next 2 to 3 years. And
Love
let me
it.
tell you, Chris, buyers are buying into that concept, and we're
I love
not
it.
pulling wool over their eyes, right? We're not hoodwinking them, and this is real. This is making sense. And the 2-1 buy down has been around forever. It's not a new concept at all.
I love it. That is
Mhm.
actually amazing. So with that
Yeah.
said, let's talk about the refinance. So you say there's,
Mhm.
that go out there, do a 2-1 buy down, right? So 2 years from
Yeah.
now, you're going to have equity in the home, more than likely, because the market is going to adjust. It
Yes.
always does. It always does. And I think, for a lot of people that
Mhm.
came into this industry and left their, I can't say that. Sorry,
Mhm.
sometimes on the real estate blitz, I don't say negative things to be mean. I just sometimes think it's funny. But
Mhm.
but I know some of this is going on Facebook. I know you'll probably use this video too, so I won't say it. But
I will.
let's
Yeah.
just say there's individuals that had jobs that saw, oh, I could just make a ton of money if I get my real estate license. No work at all. You just show up and you get paid. And
Yeah.
so they joined the real estate business. They were actually, out there showing their brand new suit and doing these TikTok dance videos when they closed a couple that year. And then
Right.
they realized the real estate market is tough because it adjusted, it changed.
Right.
So
Right.
now they're going back to their jobs, right? That they had prior. So, with that said,
Mhm.
it always changes. And this is the best part about real estate over time, especially 2 years is like a generation of,
Yeah.
of time. I
Long
mean,
time.
it's a completely different, it's the world changes in real estate within 2 years. It's insane.
Yeah.
So, with that
Yeah.
said, um, that means we're looking at a potential for a refinance plus you have equity in your home. So
Mhm.
what does that look like? Like, let's say somebody has their house for a year. So they already bought the house to where it was affordable. They did a 2-1 buy down. And now
Mhm.
they're a year out, 2 years out, and they go, okay, well, the market has shifted. I was at and it just off the top of your head. So I started at 6%. And
Mhm.
now the market is at 4.5%, let's say, or 4.7 even. Big
Yeah.
change, huge change. And now they also have equity in their home. How hard is a refinance in that type of a situation?
Very simple. It's no different than if you just forget about the 2-1 buy down. It's no different than if you just happen to have a higher rate than what it is today. We just refinance and bring you down. It's a rate and term refinance, which means for conventional you can be up in the high 90s, FHA up in the high 90s as far as loan to value, VA all the way up to 100%. It's not going to be that difficult for that person to get out of that higher rate and fix it and make it a lower 30-year fix. It's a simple process.
And I think what's wild is so because I know a lot of people that are not real estate agents will be watching this specifically on YouTube.
Yeah. Mhm.
I think a lot of people have a hard time wrapping their head around it because you can't really even do that. It's so hard to, let's say, okay, well, why would the bank want to do that? So I got a loan at a high interest rate, and
Mm.
why would they make it simple on me to say, well, now it actually got cheaper to get a loan. You can actually borrow the same amount of money that we already gave you, but we'll actually give it to you cheaper. Like, why is it?
Well,
Why is
that's
it
a great
easier?
yeah, that's a great question. The chances are the lender, the servicer that you're making your payments to, they're not going to be the ones that reach out to you. It's going to be people like me that say, "Hey, let's get you out of this higher interest rate payment and let's get you into this lower interest payment." I'm incentivized to do that because I'm going to make a little something when I refinance, right? Someone, right? So we're going to be hitting you up saying, "Let's get you out of that loan into a lower fixed interest rate loan." Absolutely, we do that all the time.
Awesome. Okay, Charles.
Mhm.
Like I said, I didn't want to keep you on too long today.
Sure.
Um,
Yeah.
And I just want to like hit it, hit it, hit it, hit it, hit it. I think everything that I wanted to accomplish today, we accomplished, and I wouldn't even mind doing
Yeah.
this with you once a month,
Love
whether
to.
it's a market
Yeah.
update or
Yeah.
going deeper, deeper, deeper. Because I
Yeah.
adjusted the real estate blitz mostly for the KSA team, um,
Yes.
and its use, but I still put it out there, and a lot of people still follow me just for this type of
Awesome.
information. So
Awesome.
to go back through, we talked about. I think the biggest takeaway for me is,
Yeah.
marry the house, date the rate. It's catchy, and I think that helps sell some people, but really at the bottom line is it
Mm.
affordable? There's three types of
Yeah.
people. There's going to be individuals that
Right.
just can't afford it. There's going to be
Yeah.
individuals that are fence sitters where you need
Right.
to explain to them, here is a great opportunity. Here's why. And if it's affordable, and here's also some other things to do. You can do different variations of buy downs. And I think the one thing we didn't talk about, and we could probably bring
Mm.
on a seller's agent for that,
Mm.
sellers are willing to give a ton of concessions right now. They're willing to
Sure.
give a ton
Yeah.
of concessions, right? And
Yeah.
then you have the
Sure.
people that can't afford it and they're ready to buy. So
Yeah.
I really
Yeah.
appreciate you jumping on. I
Hey, you're
told
so
you I
welcome,
want to do
Chris.
like a down and dirty. And with that
Yeah.
said, is there anything you would like to just leave that I might have missed that you want to express to anybody that might be
I
watching?
do want to say one last thing, and we'll catch up another time. That one conversation that's not being had is rent. Rents are going up. You got a buyer sitting in front of you, and we're trying to justify you got to buy now. You should buy now. We're not telling them that the rents are going up. I've heard plenty of stories where the landlords are arbitrarily raising the rents. Why? Because they can get away with it, right? And so you might sit there on the fence, go, "Well, I'm going to wait for the market to crash. I'm going to wait for rates to come down." In the meantime, if you're renting, the chances are your rent's going to go up sooner or later.
Yep.
I'll
Yep.
leave you with that.
Absolutely. And they're going up in a crazy way. Rents are way
Yeah,
outpacing anything that's going on in the real estate market. And
great.
it's wild to me. A small two-bedroom is,
Mm,
whoa, that's usually one of the first things that come out of my mouth. Well, what are you paying your rent
yeah,
right now? Okay.
right.
Did you know that you could actually like buy a house? And then the next one is, well, I don't think
Yeah.
I qualify. It's real easy. Again, folks, hey, I got
Call
a
me up.
guy. I got a guy. Hey, tell you what, it doesn't hurt to just call him. It doesn't hurt
Yeah,
to call him and see what if you could. What
yeah,
if you could? So,
yeah.
Charles, thank you so much for
Thank
hopping
you.
on. I'm going to make sure I get
Yeah,
this to you, and we're going to start getting it posted out. For those of you that
yeah.
watched live while we're on Facebook, thanks a lot. I always appreciate the support. And for those of you that tens of thousands that follow me, I really look forward to you watching me on YouTube and all the other areas where I am. Thank you so much, KSA Real Estate Blitz. And
Have a good day.
Charles, have a good one. We'll talk to you all later.
You
Hold
too,
on one
sir.
second,
Thanks for your
Charles,
time.
once I stop the stream.
Okay.